All right, good afternoon, everybody. It's Wednesday, May 19th, 4:30 p.m. My name is Amal. I have the pleasure of speaking with Austin Ashraf. He is a former Citi portfolio manager. He currently runs CFF Capital. He's been on our show many times, and he's always provided very unique knowledge and insight into the markets. And I figured today would be one of the best days, especially after a huge crypto collapse that we had. So I wanted to bring in Austin to get some of his insight on, first of all, his thoughts on crypto, his thoughts on what's happening in the stock market, the bond market, positioning, if there's overall risk in the market, many topics to discuss. So welcome, Austin.
Hey, how's everybody?
Looks like we got a bunch of people in the chat and they're super excited to see you, Austin. So I know I've been getting a lot of requests for a little while to get you on. So I'm glad we finally have you here.
No problem.
So let's start off with just your overall outlook on US equities, right? Like, where are you right now in terms of your mindset? Are you just typically just full on bullish mode, long? Are you hedging, or what are you doing?
Okay, so anyhow, I want to really start off with as you probably know, that I recently started to put my foot in the crypto space, but very small. And I want you to know that over the last month and a half, I swear, I have not seen this much craze. I mean, I was at a restaurant last Friday, and I know the owner, and he came to me and he goes, "Hey, what is this, all this craziness about crypto?" He goes, "All my workers," he goes, "they take all their wages and the tips they make, and they're putting everything into crypto." And I asked them, "What is crypto?" And they have no idea.
Wow, that's crazy.
Yeah. And he said, these are 16, 17, 18-year-old kids.
Yeah.
And some of them really need this money. So the speculation, this is the height of the speculation in crypto, that literally everybody that I talk to, even my brother, who was so much against crypto assets, has been just bugging me as, "Hey, should I buy it? Should I buy it now?" So I knew, that this is the time that market teach you a really hard lesson, and all these newbies that are stepping into the crypto space, so I'm not surprised that this has happened, and more than likely this pain will last few weeks as all the excess is wrung out of the system.
So yeah, I definitely want to talk to you about that a little bit more, because one thing that I definitely want to discuss is leverage and excess. And going back to your initial point, when you hear about all this euphoria, all the speculation, the one thing that of all the conversations that we've had together, the one thing I've taken away from you is really nothing new under the sun happens in the markets, right? It's the same repetitive cycle of euphoria, fear, panic, and then once again, repeat, right? Whether it's crypto, commodities, bonds, Forex, anything that people are interested in financial assets, it's really just a repetition of human emotions that go into the market, human greed and human panic. So at present moment, what you're effectively saying is you having these conversations with, say, your brother, people at restaurants, random people you meet on the street. This is really the height of euphoria and the height of speculation. Am I getting that correct?
Absolutely. I'll tell you, I have an uncanny ability when I go out, no matter who I run into, I always ask them, I say, "How they doing? And how's their business and whatever." And I remember this example. I was in California during the height of the real estate bubble, the last bubble. and I was getting my car oil changed, and I asked the manager there, and I said, "How you doing?" or whatever. He goes, "Oh, well, I just bought a house," and I asked him, I said, "How much was the house?" And he told me it was $1.5 million. And I said, uh, "Do you mind asking me, so how much do you make?" He goes, "Oh, I make like here about $40,000. And I said, "Does your wife work?" And she goes, "Yeah. She's a part-time worker. She makes about $25,000 also." And I'm thinking, I said, damn, how can they afford a house, $1.5 million house? And I said, "Did you put down a lot of money?" He goes, "No. They gave me a balloon payment, whatever the loan is called." I came back and I started shorting housing stocks. I should have shorted a whole lot more, but I started to short, and literally within a few months, that bubble just collapsed.
Wow.
You know,
That's impressive.
there's certain things that are common sense. You know,
Yeah.
people get into the frenzy. They think they can buy this asset and they can flip it, or they make some money. You know, and the system sometimes allows you to blow yourself up. So anyhow, but that speculation, that euphoria was totally different.
So, okay, so let's kind of, bring in that analogy to where we are today in the crypto market, because one could make the argument that this time is different because the Fed is printing unlimited money and interest rates are low. But as you and I have discussed over and over again, there's always going to be these huge bubbles that develop and get popped, and most of retail gets flushed out. So where do you think your mind is in terms of the crypto space, and why did you feel like, okay, maybe today's a good day to buy? Did you feel like the excess has been wiped out, or do you think that, you know what, it's okay to take a stab here? If I'm wrong, maybe the market is really starting a bear market. Like, how are you going about thinking of it?
Oh, well, by no means. It's I think that it's a bear market. Today, for the first time, I saw a panic selling.
In
Where
crypto?
in crypto,
Okay.
and it doesn't mean that it's the end. Normally, human psychology is that they remember the last trade. So every time these people bought the dip, they made money. More than likely, they'll come back in again,
Hmm.
and they will run it up and then slam. So this access is normally never wrung out in a very short period. Market will suck you in many times, and before the correction is over. And I still truly believe, if this asset is for real, that it has a long life. It's this party is not over yet.
So just to kind of reiterate, Austin, because we had some questions in the chat, people are asking, you don't believe that crypto is starting a bear market. You just believe that today was a good day to flush out participants. And then ultimately, you don't think that from here, we just sort of V-shape recover and just, go turbo mode back up. We kind of stay maybe in a defined range, stay near the lows for maybe several weeks. Is that kind of what you're saying?
Absolutely, yeah. I think that you'll have, normally, in my 25 year of investing experience, they say 20% of the people in the market make 80% of the money, and that holds true, for the last 200-300 years. Normally, people will buy at the wrong time and they sell at the wrong time.
Yeah. So sorry to interject, but let's take today as say day one, right? You yourself are entering the crypto market because you see some panic in the asset, and you're like, you know what, this is a good risk reward bet. First of all, run us through your thought process of why you think today is a good day to buy, what you think the asset class is, potential is, say, the next several months. And what do you think about, like, say, the macro picture, you think why this is in the beginning of the bear market? Like, just run us through that, because I'm sure, everybody today, especially those of us in the crypto space, we love watching the charts and we love looking at some of the leverage being cleaned up, because we see these big derivatives exchanges, they actually run their liquidation engines, and you could see all the people who had high levered positions starting to get liquidated. And that creates an utter panic and a fear in the market. And so everybody today is kind of dealing with that fear. So what do you say from your experience historically of how do we go about those emotions, and why a day like today is probably not a terrible day or not the worst day?
Anytime an asset drops 30% in a single day, you have to step up to the plate. And in my experience, I've never seen an asset that corrects this much. 30% in a day keeps going down. So normally what would happen is, just like I thought, if I could buy it at 31,000, I couldn't get in because the exchange wouldn't let me in. If I would have bought it, I'm totally convinced that I'm going to see Bitcoin in the 40s, and at that point I would probably sell half of it, if I had taken the position. Normally this thing just now, like you said, there should be a trading range. It might come in and revisit 30,000 again, but hopefully, as long as it doesn't break 30,000, and we stay in the range between 30 to 40,000, I think that would be very healthy.
Got it. Okay. Now, the other question that I think a lot of people have is, why do big sell-offs like this happen? You obviously reiterated this with that there's a lot of euphoria in the market. Every person, whether it's a person owning a restaurant, bus boys, Uber drivers, I mean, every person I know is talking about crypto. My Facebook friends, college friends, etc. But can you help us explain, like, why do these flush outs happen? Because those of us in the crypto space, we have sort of a tinfoil hat theory of people think that there's whales manipulating the market and this and that. But can you explain that to us, how it's not just whales manipulating the market? This is just how markets play out.
Trust me, I have seen this thing with real estate. I've seen with tech stocks. I've seen this thing happen with stocks in general. The market has the ability to create hype. Hype brings new investors. New investors bring new money. Market needs new blood all the time, and lately, over the last several months or so, if you anytime you turn on CNBC or any of the media thing, all they were talking about is crypto. And on Twitter, how much money people were making on Twitter. I mean, we're investing in crypto. And if you ask most of these guys, if to explain crypto, they couldn't. So
right.
Whenever you have this kind of scenario, you will have these huge drawdowns, and there will come a time where average person is going to say, never crypto again. I am not touching this thing again.
Yeah.
And that's only, you can pretty much bet that the bottom is in. A lot of people are going to lose money, unfortunately. in the space, and they would not revisit crypto for a long, long time.
Definitely. Yeah.
But it's
So
nothing unusual, nothing at all. Trust me, it's nothing unusual. I've seen this movie so many times.
that's a great point. So aside from crypto being where it is today, right? Let's start kind of pivoting over to the stock market, because it looks like for the last several months, even the stock market had kind of gone into a large trading range, especially growth in tech. Really haven't, most of growth in tech hasn't really hit new all-time highs. What are your thoughts on that front? And do you also think, by the way, that some of that correlation kind of bleeds into crypto?
Very much so. Oh yeah, that's you know, all of these asset classes, especially the high growth tech, especially companies in the SaaS area, and in general. I mean, if you can put up the chart of ARKK versus S&P.
Okay. Let's do a split screen. So there's the S&P 500 at the bottom,
Okay.
and there's ARKK.
Yeah. So you could see the outperformance of ARKK versus S&P. That's a huge delta.
Mm-hmm.
And the reason was primarily because during the pandemic, people figured out, hey, technology is going to save the day. And they dumped their value stocks, and they sold their S&P and whatever they had in their portfolio, and they bought tech. And tech got to extreme valuation. And then I think the last time I talked to you, I said, hey, I'm starting to raise money. And over the last couple of months, I've been raising money, and I came down to my portfolio at the lowest was I was only like 40% long. So I was holding on to my core positions. Anytime there's a euphoria, like people were saying, hey, these stocks are going to the moon.
Mm-hmm.
And so what you're seeing now in growth stock is very normal. They're coming back to the mean. And I personally, my strategy is I'm starting to put some of the money back into the market, but very slowly. I think next few months are going to be tough in the market. I still think there's a lot of fluff in some of the space, in some of the areas, and that's why I think that same thing with crypto. It's going to be in a trading range.
Got it.
But really, nothing has changed. I am as positive as I ever was. There's so much innovation going on, so much happening out there. I'm a strong believer in technology, and this doesn't scare me at all. I've actually been looking forward to this correction in the market.
Yeah, I know we spoke about this a couple months back, and it definitely seems like we finally got some decent sized corrections across the board. Whether you look at Zoom or ARK, Tesla, I mean, anything that was really hyped up at the beginning of the year is down at least 20, 30, 50% in some cases, right? Even great solid growth stocks. So what are some of your just a couple of 3 or 4 picks that some of us should be paying attention to in terms of growth? And by the way, as we're talking about growth stocks, are you kind of saying that you are still expecting more downside, or are you saying that probably like this is close to the bottom for growth in tech?
No, I don't think we have seen the bottom yet. I think that we still got maybe another 10 to 15% and on the growth side. So by no means that I think that we're totally done. And so I'm still 1/3 hedged, and I probably will increase my hedges again, you know. So, but I know when I put on a hedge, I know what the risk is and where I need to take the hedges off.
Right, understood.
So but on some of the names, same names that I like, I mean, I am just so bullish on Shopify.
Mm.
What Shopify is doing, with small businesses is just incredible. And I think that this company, I own a little position, and every time it drops, I pick up some more shares. So I haven't sold that position. So I like Shopify for what they're doing. I would highly recommend all of you to do your own diligence. Don't listen to me or anybody else. Look at their numbers. Go on Yahoo Finance and pull up their financials, and go back a couple of years and see how this company has performed. How their gross margins and what kind of growth they've been delivering. And I still think that they're in very early innings. So I like Shopify. I love NVIDIA. I continue to, I think that these guys are what they're doing in AI. Overall, this is the best semiconductor company. You want to definitely take a look at those guys. And then on the software side, although the stock is very expensive, but I love Snow. So I have been accumulating the stock over the last month or so. So on the data side, I think that Snow, if your time horizon is next couple of years or so, you can't go wrong with.
Yeah, that's fantastic. No, these are some great picks. Definitely something to pay attention to. What about, some of the Chinese stocks like PDD, JD.com, and Baba? I mean, last time we spoke, when we, saw the whole Jack Ma event, I think that kind of scared you out of your Chinese stocks positions. But are you kind of the same right now? Are you trying to stay away from Chinese stocks?
It's just too difficult because of the fact that the Chinese government is so entrenched in these companies, Chinese companies. It's always, every other day there's some news that affects these stocks that you have no control over. So when you have such a great opportunities, here in the US, my preference is to why mess with it? Although there's some great assets, absolutely, a lot more reasonable prices in China than here. But another thing is, it's very hard to tell, if the numbers that these companies are printing are good numbers, or their accounting rules are not exactly like ours.
Right. Totally understand. Yeah, the way they can report numbers, or the way the Chinese government can get involved in spoof numbers, it's very different in terms of accountability than, say, the US or pretty much the rest of the world. Yeah, I totally get that. So a couple more questions. I mean, let's zoom out a little bit, right? The last time we had you on, we were talking about interest rates. We were talking about the macro picture in the market. And I think, as of right now, I think you and I are on the same page, which is, for the most part, the macro picture hasn't changed. It's not like Jay Powell or Janet Yellen or anyone has changed their tune. It seems like interest rates are low. It seems like everything is just going on as usual. But do you think that, along with the low interest rates, along with how the assets are, especially tech and growth, are sort of sold off, do you think that there's maybe like a popping of the bubble, if you will? Because I know you spoke about the real estate market, back 10, 15 years ago being a bubble, but do you get sort of the reminiscent memories right now that there's like a real estate bubble, tech bubble, crypto bubble?
Not really. I mean, if you pull up the chart on S&P and Russell 2000 and IWO,
Okay.
you could see that this is really, though those two indices are still in a confirmed uptrend.
Yeah.
S&P and small cap. So it's very easy to see that all market is really doing is taking that fluff out of the high growth area.
Right. Yeah.
So and as far as the bubbles, I eventually there will be a bubble. When crypto gets to 100,000, I have absolutely no doubt that there would be a euphoria that we have never seen before.
Yeah. Understood. Do you actually think that Bitcoin or some of these assets, if they do keep trending up, are your thoughts that they can put in new higher highs, or what would kind of change your mind from thinking that? Because at present moment, I'm not seeing anything in the market that should prevent us from hitting higher highs.
Any time this is such a new thing, they will create one of the greatest bubbles in this asset class before it's all said and done short term.
Yeah.
So by no means this thing is done. They will drive this thing up. They will bring so much money into the space. So I have seen an asset class exactly behave this way. So my thinking is that over the next 6 months or so, 6 to 8 months or so, the likelihood of this asset class, and I want to make it clear that I am absolutely no expert in this crypto space. I'm just looking at purely an asset class, how it's behaving.
Understood. Yeah.
Okay. So I'm convinced that we will see 100,000 on this asset class before it's said and done.
Interesting. Yeah. I think a lot of people, especially in the crypto space, believe that. And now I've seen people like yourself, more traditional finance people, kind of jump on board, because what they see in crypto and the macro space is that, one, this is a totally new emerging asset class. Whether it's going to go somewhere or not, like whether Bitcoin and Ethereum are going to be a big part of our future or not, there's a huge amount of hype and money left to keep pumping this thing higher. And that's,
Exactly.
I'm in complete agreement with you. As if you look at it strictly from the asset class standpoint, and you look at the growth potential to push it higher, there's tons of money to be able to be dumped into this market. And I think the unique thing about crypto, say, unlike maybe the tech bubble or the real estate market, is there is far easier of an ability for the average person anywhere in the world to put in $5, $10, $20, versus real estate market or say the tech bubble back in the day. It was a little bit more, closer to the US investors, or if you were invested in those markets, you had to have a little bit more size in terms of capital, to be invested. So this is, I agree with you. So the other thing that I want to touch on is just interest rates, right? Like, are your thoughts kind of the same as last time in terms of interest rates? I mean, can you go over that a little bit?
My thinking is that with the current deficit that the U.S. is carrying, there's absolutely no way that they would allow rates to get out of hand. So, and I'm not in that camp where a lot of people are talking about inflation getting out of hand. I still think that there's a lot of actually deflationary pressures in the overall economy. Some areas like food and stuff, yeah, we have seen some inflation primarily because over the last year or so, due to pandemic, the inflation was pushed down artificially, and now that the economy is opening up, and plus with influx of money from the government, yeah, we're starting to see some rise in inflation, but it's still nothing to. I'm not in the camp that I'm not worried about inflation at all. So I still think we're in a very reflationary environment, actually.
Got it. Understood. Well, that's good to know, because I know from the last time we spoke, we talked about some of the things that kind of impact, say tech stocks and the overall, stock market from the interest rate standpoint. And so I'm glad we kind of cleared that up, that you don't quite believe that interest rates are going to be hiked up, because it would just be detrimental to our debt that we owe, right?
Yeah, it would be a disaster.
Yeah, good point. So let me take some more questions from the chat, and then we can kind of wrap this up. Okay.
Sounds good.
All right. What do y'all have to ask Austin? One of the questions is, how do you see the crypto market for the next, say 2, 5, or 10 years? And then, how do you see it as compared to the total tech market share? Like, what percentage do you think that the crypto market will be in the future as part of, say, tech and growth stocks in the future?
Like I said, I'm by no means an expert in this area. I'm still starting to. I'm learning and trying to understand. But the way I look at it and the way I figure how this whole thing is going to play out, that this whole cryptocurrency, we're probably in the first inning of this whole thing, and more than likely 5 years or maybe 2 years down the road, this blockchain technology and all these currencies, they would look totally different. Something new will come along and maybe disrupt these currencies. So and this is what happens. Remember during 2000, where the internet bubble.
Yeah.
I mean, during the last internet bubble, everything went up like crazy. If you had .com name next to your company name, your stock went to the moon. People were buying everything. They thought this is a brand new thing. But in 2-year times, almost 85% of the companies were gone.
Wow. And
there were new companies that came along, which is Facebook of the world and Google's of the world, and they disrupted even the remaining companies. If you go back and look at the companies that existed during the internet bubble versus who were the successes, a lot of those companies started after the bust of the internet bubble. So what I can tell your audience is that nobody knows how this thing is going to play out. This is still very, very new. But all I know is that initial hype is going to drive these asset classes much, much higher. And then there'll be a real correction,
Yeah.
somewhere down the line, next year or so.
Yeah.
And over the next following years, so you will see, who knows who will be the real winner, and we will understand these technologies much, much better. So at least that's how I'm planning to play this asset class.
Fantastic. We got a question from the chat. What do you think about the power and influence of people like Elon Musk that can, have a sway and a pull on the market, on their own stock, or things like Bitcoin or Dogecoin, all the stuff that he's been talking about? What are your thoughts on that?
I'll be very honest with you. I really don't pay any attention to it. Market is too smart and too big for any one individual to have meaningful impact. It's to me, it's a lot of noise. It gives people a reason, to justify, hey, this is why the asset class is going down. But
Yeah.
but in reality, this is all noise. So what Bitcoin has done lately is really nothing unusual. It got very stretched. There was a lot of euphoria. Maybe market needed some excuse. I don't think that Elon can really manipulate Tesla that much, and I don't think he can really manipulate Bitcoin.
Yeah, that's a good point.
There's just way too many players involved and too much money involved.
Yeah, I definitely agree with you. I think 5 or 6 days back, whenever it was, Elon had tweeted some stuff about Bitcoin having bad energy being utilized to for their mining operations, and that same day the market started to break down. But the point is, the market had already topped maybe a month before that, and it was already on its way to roll over.
Exactly.
It just seemed like this was a trigger that set everything off.
Exactly.
And I think, as humans, I think we always want to find reason and meaning of how one event is connected to another. And us having, say, Elon as someone to pin the blame on becomes much easier than to say, well, it looks like the market already was showing you that there's weakness. There were technical indicators, or volume was fading. We as humans don't want to follow that stuff. We want to attribute the blame to something more, tangible and visible.
Exactly. And I tell your listeners that in my experience in investing, 90% of the stuff you hear out there is really noise. And in order to be good investor, only thing that I really pay a lot of attention to is Fed. And I don't, and Fed action. What are they doing? Other than that, to me, everything else is a noise.
And just quickly recap. I mean, obviously, we know that the Fed positioning hasn't changed, right? Like, are you kind of on board with that, or are you thinking there's something different happening in the Fed action?
No, not at all. I mean, there is still, they have given you a put. The put is still there. That if the markets go down, they're telling you, hey, we got a lot more tools in the toolbox to put more money into the system.
Yeah,
they want to bring the unemployment numbers back to where they were prior to pandemic. This is very important to understand. The only way we get out of this deficits and balance our books is by creating hyper growth in this economy.
Yeah.
That's the only way we'll be able to pay it down, because our spending on social programs and overall spending is not going to slow down. We have an aging population. Spending on medical and healthcare related stuff just keeps going up, so that it will keep piling on the debt. The only solution is to pedal to the metal on the growth side. And how we're going to do that is by squeezing China, squeezing India, these countries that have been growing at a pretty fast pace. As you can see, Biden has not made a bit of difference. His policies are exactly the same as Trump. Trump understood one thing, that that we need at least 4 or 5 years of hyper growth in this economy to get out of this mess. And when Biden is actually doubling down.
Yeah, I agree. Yeah, he definitely is. Basically, what you're saying is, hyper growth, and also the way we're kind of going about the printing machine and at the Fed, inflate ourselves out of the growth too, or inflate ourselves out of the debt too, potentially.
Yeah, I mean, no doubt about it. And look what's happening, that they are forcing these companies in China and India and stuff to bring back manufacturing here, bring the capital back here. This has not happened in the last 20 years. And today, the Biden administration announced that they're going to spend close to $60 billion for the semiconductor companies and subsidies to bring the manufacturing back. Yeah,
that would be huge.
That is huge. That's why I'm very bullish on semiconductor companies, especially equipment companies like ASML, Lam Research. I think that this has become a national security issue also, because they're afraid that if China messes with Taiwan, the biggest foundry in the world is in Taiwan.
Yeah, you're talking about TSM?
Yeah, TSM, and a whole US economy can't move without semiconductors.
Yeah, we've definitely seen a lot of shortages, in semis, right? I mean, I'm sure that you've been paying attention to that.
Yeah. I mean, that's another reason. I mean, that's just stupid planning on part of the auto guys. That when the pandemic happened, they just freaked out and they canceled all their orders. They thought their sales are going to just crash and whatever have you. And these foundries ended up changing their lines to make something else. And then they realized, hey, our sales are actually going up, not going down. And when the auto guys came back to them, they could not take care of them. So it's a global phenomenon that literally a lot of US companies missed the boat, and they freaked out and canceled orders. So but on the other hand, with everything going tech, and with tech innovation and autonomous cars, and so that the demand for semiconductor was going up prior to pandemics happening. So and it really it just boosted this whole thing in a meaningful.
Yeah, it definitely did.
But bottom line is, semiconductors are a very, very integral part of this economic growth.
I agree completely. So I think that's pretty much all the questions that we had. Last thing, Austin, I do want to ask you, because we do have a lot of people who are in our community on days like today, especially in the crypto space. We do our best to, sort of console people and let them know, like, don't mess around with leverage, be very careful in, volatile conditions like this. What's maybe one or two pieces of advice that you could give people to clamp down on your emotions in days like this, and also how to keep your head above the clouds, going forward, looking, say, 3 months, 6 months out, or 1 year out?
No, that's a very good question, and I have learned a lot of lessons in my time investing, and I'll tell you this, that days like today are nothing. I mean, I have seen when days early on in my career where the market dropped, what, 12-15% in one day, so the thing to remember is you are doing investing only for one reason: to create wealth for you and your family, and do good with that money. So my advice is that have a long-term time horizon. Don't be a short-term trader. Have a strategy. If you are trading in crypto, when they get asset class gets extended, take some money off the table. It's quite okay, and leave your core position. Say, hey, this is my core position. I'm going to stick with this, and anything excess, if it once it gets extended, I am going to sell, raise some cash, and wait for it to come down. Trust me, before it's all said and done, this asset class is going to go through many cycles.
Yeah.
And I apply the same principle to the stocks. When good companies go on sale, I buy, and when they get extended, I take some money off the table and wait for the prices to come down to a reasonable level again. But I know that you probably can't do a lot of research on crypto side, but you can definitely do your due diligence on stocks. The more time you spend studying the stock and better you understand the story, the more comfortable you're going to feel, and the more happy you will be when the prices finally come down to your price range. So do your due diligence. I'm sure your listeners are very smart people. Yahoo Finance has tremendous resources. Look at the ideas and study these a lot of these companies. These companies are going at a phenomenal rate. Like I was talking about Snow. Snow is a very expensive stock. It is still trading at 50 times sales. It's the most expensive software stocks out there. But these companies are growing at a phenomenal rate. And in the next, I remember exactly in what was it, 2011, Amazon was the same way. It was so obnoxiously expensive, and but they were growing their top line at a phenomenal rate. And the stock was trading at what, $11-12.
Wow.
They were losing a lot of money, but their sales were, the top line was growing at almost 100%.
Yeah, that's impressive.
Eventually the price caught up with their growth rate. So a lot of these companies, they look very expensive, but if you have a long-term time horizon and you can accumulate the shares, I'm sure that people that had Amazon in those days and held on to the stock, are not complaining. So my advice is find good managers. good managers that are good steward of your capital, that have done it before, that have delivered performance for their shareholders before, and find good companies that are growing their overall market share, and are well managed. You can see it by how their gross margins are, how they're managing their revenue per employee. That data is all available to you. You can do your research. The more you know about a company, the better you're going to feel. And in a day like today or yesterday, whenever the market goes down big, that doesn't phase you at all. You only think about maybe picking up a few more shares. So
Yeah.
That's the strategy that I have used over the last 30 years, and it has worked very well for me.
That's some solid advice. I definitely think we can all use that. Well, I just want to say thank you so much again, Austin, for all the wealth of knowledge that you have. We love having you on, so hopefully you do come on more often. And now that you're one of us because you purchased some crypto, hopefully we get you on more, crypto related conversations.
Anytime if you guys have any questions or whatever, you can send your questions to Amol, and we can do this again anytime. So
awesome. Well, thank you so much again,
guys.
Yeah, thank you, Austin, and we'll definitely see you soon. Take care, everybody, and we'll catch up soon. Cheers.
Take care. Bye-bye.